Chakri Lokapriya as well joining in on the show. Chakri, good morning. Let's get in your take then first up on what's going on with banks, because it's interesting data that we have that a lot of stocks as well that have managed to, that are near their highs. A lot of them include the banking names, HDFC Bank or an ICICI Bank, for instance. How are you looking at the comeback of the banks, and do you believe that this is likely to be a trend that will play out in the year ahead?
Good morning. Thanks for having me. Yes, indeed, it is going to be a trend because we're still not yet there at the upcycle of a loan growth. We're towards the end of the down cycle of the loan growth. So I think the next trigger is the RBI's rate cut, which is very essential for the economy to revive. As we go into the next quarter, I mean, when the companies start reporting earnings, you'll see that we're likely to see lots of downgrades of earnings. So against that backdrop, I think bank loan growth has to pick up.
Bank loan growth needs to pick up. That seems to be the consensus view. But a lot of fundraise which is still underway, and I'm not just talking about the primary market and the fresh issuances and IPO coming to the bosses. There's a lot of secondary fundraise as well which is happening. Mankind Pharma, we talked about a 3,000 crore QIP. HCC, a 600 crore QIP. Gravita, we were just talking about how the size of that QIP has been upscaled from 750 crores to 1,000 crores. And Mindspace REIT, wherein there's a block deal of almost 2,000 crores happening. Chakri, if you had some money to spare of a large size, where would you put the money from the companies which, let's say, are out to raise funds right now? Mankind, HCC, Gravita, Mindspace REIT?
Yeah, it would be into the industrial and cyclical companies because, that's where I think we'll see the biggest earnings uptick going into the next year. And, that earnings uptick is at least a couple of quarters away. So ahead of that, I think HCC, well positioned, a large company can undertake very complex projects. And with this QIP, it will place the company with a stronger balance sheet.
Okay. Any take on Escorts Kubota basis the management meet takeaways?
Indeed, the range of products is expanding very fast, and so that it reduces the cyclicality of the business rather than in the past where you had to depend mainly on the tractors. And that is clearly a welcome development. And, again, being an industrial related company now, Escorts with its wider range of products, it will benefit from, again, an interest rate cycle easing that we hope to see in the coming year.
Okay. Chakri, curious to get in your take as well as to what the outlook is on a Piramal Pharma, given that we were just discussing it earlier today. The JM Financial view is that margins could potentially expand, steady cash generation. Do you believe that all of this makes a case for a decent performance? Do you track it?
Yeah, I think the company's earnings are likely to recover going into, let's say, about 18 months out. And if you look at it from that perspective, then the stock's valuation will look far more attractive, probably at about 14, 15 times. And that growth will be aided by coming from the CDMO business. And now that's a space in which, they have built fairly strong inroads into. And so therefore, there is a certain amount of protection. Now, the only one big wild card is once Trump comes into power, there are certain likely to be all the tariffs that the new government is talking about. And that's one factor to watch out for. But otherwise, there are enough business catalysts and the stock is cheap enough if you look at it on a 27 basis.
Okay. Stock that I wanted your take, Chakri, regarding was Swiggy. I mean, yesterday, what a move that stock saw, 13-14% higher after that Axis Cap initiation. And that's not the first initiation. Just last week, we had CLSA and others talk about that. The market cap is now over, 1 lakh crore rupees. The price is above 600 and it's higher than a lot of those listed Nifty 50 companies now in terms of market capitalization. Chakri, would you still buy a Swiggy at the price of 600 bucks a piece?
After a lot of these initiations and all those things, they keep pushing up Zomato's price up for whatever reason. And therefore, the valuation discount compared to Zomato has been widening for Swiggy. And as a part of that, it's been going up alongside. Now, but the one risk of Swiggy is more technical, which, the technical experts will have a better handle on, is the supply coming off of the anchor investors, which opened up last week. So that supply will try to keep a lid on the stock. But once that supply is out, I think the stock can move much, much higher. There's a very good upside on the stock maybe 30-40% easily once the supply is out.
Also find out your take, Chakri, on how you're reading into pharma as a sector, given that a lot of experts now have been talking about quite a bit of promise in the year ahead. Yes, expensive valuations aside, there seems to be a lot of factors that will likely boost the sector in the year ahead. What's your outlook?
You're right in terms of, there has been a lot of commentary that, there will be a number of factors which will help the sector go up. But we have a slightly different view in the sense that, we would wait and watch for the simple reason that once Trump comes in, the tariffs are going to be right at the forefront of pricing of various sectors which are export driven from India. And pharmaceutical is a very important export as well, export market for the pharmaceutical companies. Therefore, and that can impact earnings growth rates quite dramatically if the tariffs, the numbers, and that's a government to government thing. So companies will have less of a say. So we'd rather temper and watch the space.
Wait and watch. That's the view coming in as far as pharma space is concerned. But Chakri, what's the view on paint sector? Clearly, the competition there just keeps on getting higher. And I was just going through a note that came in from Investec. They're talking about how customers are actually responding quite well to the Birla Opus products. They are looking as repeat customers as well. They've managed to deepen their presence into the dealerships and increase the dealer network as well. Do you think this entire industry is in for a big disruption?
Whether it's Birla or even JSW, all of their entrance into the paint sectors, they're all very big companies with very strong established distribution networks into allied products, whether it is cement, adhesives, etc. They're all very well, and it's the same distribution channel which also sells paints. So it becomes far faster for a Birla or a JSW to build those channels, which Asian Paints and Berger, etc., took many decades to build. These guys are building it in a couple to few years. And they're also throwing good amount of capital at it, and pricing power is gone for the industry. I think it is a volume game, and so those kind of multiples are unlikely to come back for the industry. It's a industry in terms of multiple de-rating, and therefore I think it's best that we avoid these stocks.
Okay. Industries, all the credit goes to Bajaj Finance, Trent for being classic multi-baggers, Supreme Industries. And ladies and gentlemen, let's look at the graph here, please. And it absolutely amazes me that when HNI investors, especially from the Inam family, when they have ownership in this, 1 month doesn't matter. Look at 3 year, 5 year, 10 year. That's the kind of number, that's the kind of return will mesmerize you. It may be in flat in last 1 year, but in last 3 years, it is up 100%. You stretch it up more, and you'll be surprised with the kind of gains what Supreme Industries has given in last 8-10 years. Do you track this one, Chakri? I'm just taking my chances. I don't track it so actively, but I know this stock has created massive wealth.
You're right. The company is actually very well diversified across the various PVC, polyurethane, all those kinds of markets, and it has a fairly strong market share across various segments. One of the company's strengths is, is able to manage its inventory quite well because of the PVC and the various fluctuation in the raw prices, which are all oil linked. And, the last 1 year has been very volatile, as we know, for the oil industry and its derivative products. And therefore, all these companies have suffered huge amounts of inventory hits and margin hits as a result, because they're unable to price their product well. So as this whole world of oil stabilizes and the downstream kind of stabilizes, I think Supreme Industry is a market leader, very well placed to do well.
Okay, that's a take coming in on Supreme Industries, but Vedant.
On that note, going to let you go. Thanks so much for coming by and sharing with us your market outlook. Let's get in those.
If you like this video, then like, share and subscribe to ET Now.